This lady I was just speaking about, came in with over $4 million from a big box firm. And the advisor had her in a bunch of old school, funds that were 10, 15, 20 years old. These are mutual funds primarily with high expense ratios, meaning the funds were pretty darn expensive. And on that $4 million portfolio, the fund expenses alone were over $30,000 a year. Now, there are pieces of our portfolio that we put together here at Abich that don't have any fund costs, and there are pieces that do. Typically, the pieces that do have fund costs are going to be the ETF, the globally diversified ETF portions of our portfolios that do have fund expenses. And a lot of the times, Vanguard funds and other funds, Fidelity, Vanguard funds, the QQQ, they're in there, and the expense ratios are pretty darn low. But what we found out when we are comparing fund expenses, if this lady lives another 10 years into her mid 80s, we would have likely helped her recoup over $300,000 in saved fund expenses, not even advisory fees. Because who looks at your fund expenses and how often do you look at them? 0.77 was her average fund expense, when really they should be down at 0.1 or lower, maybe even 0.05 or lower. As an example, a lot of Vanguard's fund expenses, Heather, and their ETFs are 0.04, 0.05. I mean, you're down to almost where these funds are free. I think that's going to be a good thing across the board for all investors. And for this lady, again, a savings of $30,000 a year.